'Tis the season for more patterns. It is January 2025, and let's talk about the money calendar pattern. Now, the money calendar pattern, let's talk a little bit about this. Yes, we have corporate earnings coming out. They're starting now, right? Got companies, what companies are reporting here real soon? Delta Airlines. There's an airline stock. Walgreens, not expecting much out of them. Constellation Brands, right? They're probably going to have a pretty good one. I mean, Constellation Brands, a lot of people really hooped it up this holiday season. That might help for Constellation Brands' earnings and their revenues. So these are completely three different companies going in three different directions. And so you've got that. What else happens in January? You know what? Las Vegas. You got the Consumer Electronics Show, which is going on. In fact, I was looking at some tech to buy, and of course, I had to listen to my Gen Y son, who said, "Wait till after CES. Everything that's in 2024 is going to drop. If you're looking at 2024 stuff, the 2025 stuff is going to be shown real soon." And then they're going to reprice the 2024 stuff. And I'm talking about things like flat screen TVs, electronics themselves. So that's a big thing that's happening here in the month of January. All right. Forget about sentiment. Forget about influence internationally. Forget about everything that I just talked about, earnings and the CES show and all that, because the money calendar takes a look at history. History around dates on a calendar. And so what we do is we take thousands of stocks and we crunch them. And what we do from there is we find stocks with 90% or better patterns. We'll take those patterns, we'll move them down into which ones have the best trends, which ones have the best, they're not a 2-day pattern, but they're not a 2-year pattern either. We look in that 20 to 40 day sweet spot. I call it an income pattern. And then from there, we sort it by which ones have the best trend. So this is the month of January. You're seeing it on the screen. Like I said, looks like a calendar to start. I look at a minimum of 10 years. And when I'm looking at the overall calendar and you're looking at the month of January, all right, you can see here, here's the markets closed for President Carter's funeral. Here's the markets closed for MLK Day, all right? And so we see the rest of the screen is green. And we're seeing I'm seeing now when I see 95% today and 5% bearish, I'm talking about the overall patterns. I have bearish patterns that have 90% historical accuracy. I have bullish patterns that have 90% historical accuracy. We find the ones that are bulls and bears and I throw them on this screen to get an idea of what the overall market is looking like. Well, guess what? For the month of January, the past 10 years, it has looked like this, mostly green on the screen. Now, what I do is I'll click on a day, like for instance, today, January 6th, and that brings me into details for today. Now, I blew this up because I look at a lot of different things, but what I did was I ranked these by which ones are the trendiest. It means which ones are actually showing us the best market trends over the last 10 years during these January patterns. As you can see, we have a Palo Alto trade up here for 29 days. Buying it now, holding it for 29 days. About an 11, almost a 12% return. 9 out of the last 10 years accurate. All right. Applied Materials. Same thing. This is a 31-day pattern. A little over 12% return. 90% accurate. ServiceNow. 29-day pattern. 12% average return, each pattern, winners and losers combined, right? 90% accuracy. ASML is on here. 11% return, 29-day trade, 90% accuracy. And Raymond James Financial rounds out the top 5. That is a 31-day pattern, 90% accuracy, that has returned just under 6% during the pattern. These are all basically, when you look at them, they're 29 to 31 days, but those are trading days. Add on the weekends, add on the holidays. You're talking about trades that really kind of go to about the middle of February, if you're counting weekends and holidays. So let's take a look at one of these. And the one I want to look at is PAN-W. This is Palo Alto Networks. So when I go into Palo Alto Networks, it brings up a lot of information. This is probably the most important thing that I like to look at is the last 10 years. Shows me 2015, it was a winner. All right. 17, 18, 19, 20, 21, 22, 23, 24, all winners. The only losing time was in 2016. Now, if you remember back in 2016, that month of January was not a good month, right? It's not a good month for the stock market. But over the last 8 years, it has been a winner for PAN-W, with the last 2 years being in the 28 range. That's pretty incredible. Now, this line you see here, this is a regression line. What we basically do is we look at all of this data here over the last 10 years. And I'm trying to get an idea, is that line going up or going down? I will not get into a seasonal pattern if the regression line is going down. It just tells me the pattern's getting worse, not better. For Palo Alto, the line's getting better. In fact, it's over 20%. So is it possible that we could look at Palo Alto's price today, which, by the way, it's pulled back. It's pulled back from about 205 or 208 to 178. It's about 30 points. So it's pulled back about 15%. So here's an interesting scenario that's coming up. Between now and mid-February, is it possible for Palo Alto Networks to return, just to return to its year-to-date high, its one-year high of 208? I think it's very possible that could happen. Now, it's also very possible that it could continue to move lower. So you got to draw a line in the sand if we're looking at these and decide where's the risk. And to me, the risk would be we're hitting the 50% retracement level right now, very close to it. We get below the 61.8. Let's call that 165. That might be an area to say, cut me. All right. So if we're looking at, say, 178 to 165, what is that? 13 points of downside. But then you have 178 to 208. That's 30 points of upside. You're looking at a better than 2 to 1 on the stock itself. All right. So in summary, with seasonality, mostly bullish on the calendar. In fact, I don't see any bears. There's some bears on the calendar, but you can't see them when you're looking at the monthly calendar. You got to go into the day to see where the bears are hiding. All right. Tech stocks and financials, they are at the top of the seasonality list for January. And beware of the inauguration volatility, because we could get a big price swing one way or another. And, keep in mind that it's going to be the day after the inauguration where that price swing is going to likely happen, because we're likely to see a lot of movement between the time Trump takes the oath until the very next day, once he's put his signature on several, I'm going to call it, documents. All right. We'll see where that ends up going. But that's the money calendar for the month of January.